With its cutting-edge electric automobiles and audacious ambitions for the future, Tesla has been making waves in the automotive industry for years. Investors and consumers alike have been captivated by the firm, but is Tesla stock undervalued? Some analysts think that the GF value provides a special method for determining the intrinsic worth of a stock. The fair value of Tesla is far greater than the share price right now. This means that if you're looking for an investment with the potential for large returns, Tesla stock might be a hidden gem. However, before making an investment, you should conduct due diligence and consider Tesla's profitability, growth prospects, and financial strength. Keep in mind that there's no guarantee that Tesla's stock will continue to rise. Today, we're going to dive headfirst into the exciting world of Tesla, removing the layers of innovation and investment. Is Tesla's value really in the fast lane to success, or are there potential roadblocks ahead? Settle in for an in-depth analysis of Tesla's core values as we explore the company's thrilling history, present and future prospects, from astounding technological advancements to enthralling monetary insights. We have everything prepared for you. So before we set out on this thrilling journey, let's get this video started. Remember to hit the like button and subscribe to Tesla Stock News for your daily fix of information on everything Tesla. When Tesla went public in 2010, its market value was $1.07 billion. Throughout its early years, the company's valuation varied greatly, peaking at $28.6 billion in 2013, and then dropping to $2.2 billion in 2015. Tesla started to earn a profit in 2016 and saw a steady increase in its valuation. In 2017, the market valuation of the corporation topped $50 billion. 2019, we'll see $100 billion, while 2020 we'll see $500 billion. On January 3, 2022, Tesla's valuation reached its highest point of $1.2 trillion, making it the most valuable car maker globally. However, since then, the company's valuation has decreased by almost 65, and it is currently trading at a market capitalization of $777 billion. The unstable assessment history of Tesla has been influenced by a number of variables. The company's aspirational objectives and future ambitions. Tesla has set high standards for itself, including obtaining fully autonomous driving and bringing electric vehicles within reach of the general public. Although these objectives have thrilled investors, they have also increased Tesla's valuation's vulnerability to mood swings. Tesla's reliance on its flagship Model 3 product. The majority of Tesla's revenue comes from the Model 3, which is the company's best-selling vehicle. Due to this, Tesla is susceptible to fluctuations in the market for the Model 3. The production issues faced by the company due to Tesla's difficulty meeting its manufacturing goals, there have been delays and cancellations, which has disappointed investors. The public character and contentious remarks Tesla's CEO and well-known personality Elon Musk has made a number of contentious remarks, including consuming marijuana during a live podcast. Despite Tesla's history of variable price, these remarks have occasionally tarnished the company's reputation and increased volatility in its valuation. Although Tesla is still the most valuable car company in the world, its valuation is expected to remain volatile in the upcoming years as investors balance the company's long-term potential against its short-term challenges. Despite this volatility, experts believe that Tesla is still undervalued. For example, as of September 4, 2023, the Tesla Inc. stock chart tells us a tale of a daily dip at minus 5.6% and a 3-month ascent of 18.7%. The company's earnings per share comes in at 3.53, but the big question in this video, we're going to take a deep dive into Tesla's valuation world in order to uncover some answers. The company was founded in 2003 and is based in sunny Palo Alto, California. Its mission is to electrify the world by creating electric vehicles, but that's not all. They're also in the solar business, providing panels and stylish solar roofs for power plus batteries for convenient storage in homes and businesses. And I also mentioned that they have a nice assortment of car models. In 2022, they proudly delivered over 1.3 million vehicles worldwide. This is where things start to get interesting. Their share price is at $245.01, with a market valuation of an astounding $777.70 billion. Tesla is a titan in the industry, but hang on to your charging cables. The GF value is like a secret sauce for figuring out a stock's real value. With a juicy 455.84 cents per share as its fair value, Tesla's stock may just be the market's hidden gem. Have you ever wondered how analysts determine a stock's true value, like in the case of Tesla's? Well, that's where the GF value comes into play, and we'll explain it in this video as well. So what is the GF value exactly? It's a unique method of determining a stock's intrinsic value, kind of like a secret formula, but not so secret. This nifty number is determined by combining historical trading data with an internal adjustment factor based on the company's past performance and growth, as well as projections about the business's future performance. When the stock price hovers well above the GF value line, it's like paying more for an overpriced designer label, and future returns may not be as exciting. Conversely, when the stock price hovers comfortably below the GF value line, it's like finding a hidden gem at a garage sale. You can imagine what that could mean. It's undervalued. The potential for future returns to exceed expectations based on the company's current growth is substantial. Speaking of Tesla, our current start, it appears that the stock of this fascinating company could be one of those undiscovered treasures. Before making an investment, it's like checking the financial health of your car to make sure everything is functioning properly. Here, when it comes to investing in a company like Tesla, think of it as making so your travel companion is ready for the journey ahead. A key way to gauge this is by looking at two things: the cash to debt ratio and interest coverage. The numbers tell us that it's significantly undervalued, hinting that its long-term returns might just be brighter than the sun in California. Where it all began, with a cash to debt ratio of 3.97, Tesla's financial health is not just remarkable, but also comparable to having a strong financial safety net. About 80 of the Tesla's rivals in the auto and components industries are inferior to it. To put it another way, this ratio essentially shows how well equipped the company is to handle any financial turbulence and to continue driving toward its ambitious goals with confidence. In the case of Tesla, this strong cash to debt ratio indicates that they are well prepared to handle any financial bumps in the road, continue driving toward their ambitious goals with confidence. It's a reassuring sign for investors and enthusiasts alike, highlighting the stability and resilience of the company's financial position overall. Not to break it down even further, think of it as akin to having some extra cash in your wallet for those unforeseen expenses that life can throw your way. Let's now discuss profitability, which is similar to evaluating how successfully your preferred bakery is operating. A bakery indicates that delicious foods are being made there. With an operating margin comparable to that of a bakery, Tesla has outperformed nearly 88% of other companies in the same industry. That's a pretty good bake-off, but hold on to your hats. This is just the beginning of this incredible story. Tesla has been in the profit game for 3 of the past 10 years. In the last 12 months alone, they brought in a whopping $94 billion in revenues and earned 3.53 cents per share. Growth is the amazing conclusion of this story, not simply a small side story. Imagine your favorite backyard tree, the one that seems to reach for the sky, growing stronger and taller with every year that goes by. And we'll envision Tesla in a similar light. Over the previous 3 years, Tesla has been on an absolutely astounding upward trajectory. Imagine for a moment that Tesla is outperforming the vast majority of companies in a field known for its fierce competition. Their average annual revenue growth over this period stands at a robust 36.4%, a figure that propels them ahead of nearly 94% of their industry peers. Tesla's performance has been akin to that magnificent tree's growth, and it's a growth story that has set them apart in the automotive and technology sectors. Although we're often enthralled with the sleek lines of Tesla's electric vehicles and the groundbreaking advancements, sustainable energy is the remarkable growth story that's been unfolding behind the scenes that truly solidifies Tesla's position as a standout force in the business world. Hey, we're not done yet in this video. We're also delving into a classic financial face-off today, ROIC versus WACC. To put it into perspective, this rate surpasses roughly 97% of other companies operating in the same industry. Consider the process of evaluating a company's profitability as a friendly match. Return on invested capital, or ROIC, is a measure of how well a baker turns flour, sugar, and eggs into delicious treats. It tells us how efficiently Company generates cash flow from the capital it has poured into its business. On the other side of the ring, we have weighted average cost of capital, or WACC, which is the interest rate a company is expected to cough up on average to fund its assets. Here is where it gets interesting. If the ROIC is flexing its financial muscles and surpasses the WACC, it's like saying the baker's cookies are selling like hotcakes and the company is creating value for its shareholders in Tesla's corner. The numbers tell us that over the past 12 months, the ROIC has solidly averaged 24.6, while the WACC is standing at 1938. This now that we've covered the high's potential challenges and constantly changing landscape of Tesla, it's time for your feedback. As we wrap up our video, we'd like to acknowledge Tesla as a potential gem on the stock market stage. Tesla stock seems like an enticing prospect, blending financial strength, decent profitability, and growth that outpaces most of its peers in the vehicles and parts industry. What do you think about the valuation of Tesla? If you've enjoyed this in-depth look into Tesla's world and want to stay on top of developments, the tech and stock markets, please share your thoughts in the comment section below. Additionally, if you're a subscriber to Tesla Hype, your support keeps us motivated to bring you more exciting content.